be the big day as far as the banking sector is concerned. We are obviously awaiting the Monetary Policy Committee. So he may be in the news for all the buzz surrounding his second term on Mint Street. But Raghuram Rajan may have a more immediate agenda right now. That is, of course, to decide on the policy stance he is going to take tomorrow at the RBI monetary policy. Not that one expects any major fireworks on the rate front, with the CNBC TV18 poll showing that no one is expecting a rate cut this time around, leaving all rates at their current level. But what the street's going to keep a very close watch on is any comments on liquidity transmission. So let's bring in Latha Venkatesh to tell us why it's so important. Latha, why is this policy focus on liquidity?
Okay, well, as Ritu's poll showed, that rate action is going to be absent according to the market. Now, in the April policy itself, the Reserve Bank announced that it will reduce the amount of liquidity deficit that is prevalent in the market over 2 years. Now, liquidity deficit refers to the amount of money that banks borrow from the RBI in the repo window. Market will want to know that, although the overall plan was over 2 years, how much will the RBI reduce immediately? Will it bring this borrowal from the repo window to zero? That's going to be the main question. We should understand that RBI has walked the talk. It infuses liquidity normally by buying bonds or by buying dollars. When it buys, it puts rupees into the system. And since the April policy, it has bought 70,000 crore worth of bonds. So it has infused that much liquidity. And therefore, the bank borrowal from RBI on a daily basis, which used to average 1.5 to 2 lakh crore in the Jan-March quarter, has dropped to around 60 to 65,000 crore in the last few weeks. Now, the market will want to know also how the Reserve Bank will tackle the $30 billion that will flow out in September. It flows out only in September, but the market will want to worry how RBI will manage it, because in the run-up to it, there will be a lot of uncertainty and tightness. Now, actually, RBI easily has its reserves are shooting up. It can easily sell $30 billion to the banks, who have to repay to the depositors who will take back money. Remember, this is the 30 billion that NRI depositors opened in India in September 2013, when there was a run on the Indian rupee and we had to shore up our reserves. That matures this September. While RBI can sell $30 billion, when you sell, banks pay for it. And that is 2 lakh crore rupees that they will pay. How will Reserve Bank put back that rupee liquidity into the system is something that the markets will watch out for very closely. So, although not much of rate action, a lot is going to be placed on how RBI tackles liquidity.
All right, Latha, thanks for joining in with that.